The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And the stock of the day is Flight Centre. So it was out addressing an investor conference today, but also put out a trading update. And it says that it's expecting a heavier weighting to earnings in the second half. But it also says, and this is a quote, that it's currently too early to draw conclusions as to likely trading patterns over the full year. So without providing figures around the outlook, Flight Centre says that it will provide guidance for the full year at its AGM on the 14th of November. So Flight Centre is expecting between 4 and 5% growth in overseas travel in FY25, but said that solid international ticket sales in the first quarter have been offset by ongoing airfare deflation. So broker RBC Capital Markets has a negative sentiment rating on the stock, a $21.53 price target, and the title of its report on Flight Centre, which I thought was interesting, Next Travel Domino Falls. And the stock is down 16% today. A lot in there, Jim Bay. But I was saying to one of our producers, Marius, and I don't know if this applies to you, I said sometimes when companies say that earnings will be weighted to the second half, it can be a little bit of a red flag because anything can happen between now and then.
Exactly. Well, that's what investors reading, and essentially just saying, first you're saying that there's no guide. Well, you're not sure what the 2025 might look like, and there's so much volatility. And then you're saying the second half is going to be heavily weighted. So that simply means the first half might be terrible. And then what confidence do we have when we move to the second half? So I think this is a challenge. And then the thing with this stock, with Flight Centre, they often do this. So they often disappoint on some of the guidance they put out there. 3 months ago, they were very bullish out there saying the corporate travel and everything's doing very well for them. They are taking share, but clearly macro, they just can't fight against it. Look, my view is that I still like this company. It is down to, it's down 16%. There will be some downgrades today, but I don't think it's in the vicinity of, in the double digits. But I do think that, should the consumer improve into next year, they should see the sentiment improve, and particularly in the US, that travel side of corporate travel side of things, when US rates have already been cut, and another 2 coming this year. So it should be quite reasonable to support this company.
So if you did not own Flight Centre, would you buy it today? Because it's a 16% drop. And
I will be buying it. But probably not full position, but it's I'll be buying it.
Okay, so let's just call that a nibble, I guess.
Yeah.
Adam?
Look, obviously, like they said, too early to draw conclusions. So I think this share price, and if you draw the parallel to Webjet just beginning of the week, right? It had the big fall. We don't have the chart, but it had a big fall, and now it's continuing to be sold down. So I think this might happen with Flight Centre as well. What you want with these big days and these big drawdown days is you want that stock to start to flatline a bit, just move a little bit sideways, just so that the buyers and the sellers are somewhat meeting in the middle somewhere, and that gives you the opportunity to get into this thing. At the moment, you're going to catch a falling knife. I don't see a V-shaped recovery on this share price. I think this is going to take some time. And we got the indication from Webjet at the beginning of the week. I should have really been shorting this as well. But then I got on the phone today, spoke to a couple of Qantas clients with larger holdings in there, and I said, look, this is the read-through from Webjet, this is the read-through from Flight Centre. How about we start taking some money off the table on Qantas, because that potentially is that next domino to fall inside of that as well. So for me, I think it's definitely a buy for Flight Centre, but I'm not going to be going in just yet. You need to see that sideways motion, and that can take up to a couple of weeks. So be patient is what I would say with this one. But anything from $18 or to $20, I'm a seller at 20. I think this has got you got 10% uplift in this one just where it is. It's not a bad one at the moment. But markets don't like uncertainty, and they didn't help themselves when they said we can't forecast what's going on. That's a red flag to the markets, and then they just sell and ask questions later.
I mean, kudos for being as honest as you can be, but this is what happens, right? So, okay, Flight Centre, it's a little bit of a buy. We'll see how we feel about that one a little bit later on. All right, we'll see how the rest of the show goes. That was the stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.